Hello, everyone, and welcome to the DebtCircle podcast, India's only dedicated platform for debt market. I'm Leelavati Shetty, your host for today's episode, Following the Foreign Money. Foreign capital influences everything from markets and bond yields to currencies and investor sentiments. But what drives foreign investors towards India and what makes them leave? To discuss FPI flows, debt markets, and India's global investment story, we are joined by Rima Agarwalla, Head Debt Advisory at Unitus Capital. Welcome, Rima. Welcome to the Debt Circle podcast.
Thank you so much, Leelavati, for having me here.
To start with, let's start discussing about understanding how the FPI flows are. So FPIs are often described as hot money, and is that characterization fair, or does it oversimplify how foreign investors actually think?
Interesting question, Leelavati. It's perceived to be hot money, but the way I would say that we are oversimplifying FPI. FPI is not a homogeneous capital, it is distributed among pockets. So you have hedge funds, you have pension funds, insurance, and multiple different buckets of capital. And every bucket think totally differently, have their own investment horizon, have their own risk return policy. Say, for example, there's a macro situation which is not very favorable. A hedge fund would move very, very quickly. But a pension fund, by nature, they are patient. They want to stay invested for a longer horizon. So they remain invested. So the way I would say, Leelavati, is that you should not make a comparison between domestic versus FPI. I would say that you should do it long term versus tactical, right? Also, the allocation reallocation keeps happening. Every investor wants a trade off between risk and return. So instead of calling it hot money, I would say you can just call it a global source of capital who are looking for optimum risk return trade off.
Okay, so it's the tenure which matters.
Yes.
It's the risk associated with the asset class which also makes a difference.
Absolutely, absolutely.
So, what are the biggest factors that drive foreign capital into a market like India?
See, there are two factors. One is domestic, which is India related. Second is global. And these two could be related to each other and may not be related to each other. Let me give an example. Let's say there's a macroeconomic situation. Let's say a treasury yield of a large developed country suddenly falls. So investor would start pulling out the money and look for a better place to invest, right? And that is where we may attract a lot of foreign capital because a developed economy is not offering the yield it is supposed to be doing to the investor. Second scenario is also there are a lot of situations that is playing out in the country in our favor. India at this moment is at a great inflection point. You have large population, the domestic consumption is increasing, their infrastructure development, their push towards manufacturing, digital infrastructure. So both global and Indian story put together is able to attract a lot of foreign money. So I would say the way we should look at it is India versus other emerging sectors. I think that's a longer discussion that we may require, that how investors are perceiving India versus the other emerging sectors.
Very well said, very well said. So, are foreign investors buying the Indian story, or are they simply allocating capital based on, relative opportunities?
It is both, I would say, Leelavati. India growth story, I think to some extent it is factored. Investors understand that this part of the geography is holding tremendous potential. And this also comes from the fragmentation that we are seeing in the global channel, right? China plus one policy, right? So all the investors are looking at an alternate market to invest, and India is coming across very well positioned towards that, I would say. So yeah, it's a great time to be in this country, and FPIs are looking at this sector.
So, what do FPI see in India that they don't see in other emerging markets?
Very valid question, Leelavati. We oversimplify when we say that India is offering a very high yield. There are other emerging countries which are offering very high yield. There is Mexico, there could be Brazil. But why FPIs are being skewed towards India? The reason is credibility, the trust that our economy has built over the year. And there are multiple parameters. I think the biggest reason is that we are included in global bond indices, right? That's a large validation for Indian market. We are making a lot of structural changes, making Indian market suitable for global investors. Political stability is one major factor. Plus the other factors that I mentioned, the manufacturing push, digital infrastructure, the consumption in India is growing day by day. So it is scale with credibility is what we are offering, which perhaps many of the emerging market are not there, in that position at this moment.
Okay, just to build on to that question, we're talking about debt market opportunity. So India's debt market has seen a lot of foreign participation in the recent years. So what has really changed?
Good question, and a question which is close to my heart because I work in debt day in, day out. In fact, one very recent statistics, in fact, this June actually saw an influx of almost $3 billion in the Indian bond market. Of course, major reason has to do with how we are managing tax. We scrapped off long-term capital gain, and that has attracted a lot of foreign investors. But honestly, when I see a foreign investor, a tax benefit it's not the major benefit they would eye on. They would eye on, can I get sustained credible return over the years? Can I remain invested in the economy? Can this economy absorb shocks? Because last couple of years, I think the world has seen multiple geopolitical scenario, right? COVID, the Russia-Ukraine war, the Middle East conflict, energy crisis. And India, fortunately, has remained reasonably resilient despite such adverse macroeconomic scenario. So I think the resilience actually is something the investors, especially the foreign FPIs, are valuing at this moment.
As you rightly mentioned, with such adverse market scenarios, has the global bond index inclusion has lived up to the expectation?
Increasingly so, Leelavati. So I think let's see one step at a time. It's not a sprint, it's a marathon, right? So passive investors earlier who never had access to this particular bond market are able to access this, right? We were probably not even on the table of global fixed income fund managers. So we have covered a very large journey, and I think the benefit we would see in coming years, we see many passive long-term investors would start putting in money. And it's not because we are providing tax benefit. We are providing a risk-adjusted return which other economies of our size are not able to provide.
So when we talk about investments, so what's stopping or preventing foreign capital to flow into the Indian debt market?
I won't say preventing. I think India required a lot of structural changes, which we have done. Of course, the way you mentioned that inclusion in the global bond indices, I would feel that it took us a lot of time to be there. Hopefully we get included in Bloomberg indices very, very soon in the month of July. So as an investor, when I would look at a market, I would look at the yield, but I would also see that how frictionless the process is. So we made the structural changes. We have to smoothen out the process. I think that is very, very important part. There are a couple of more points that an investor would look at. Is how liquid the market is. How is my resolution process? So these are plumbing work, the way I would say, right? And as and when we plumb these open points, close these open loops, we'll see more and more capital to be flowed into the country.
That's such a beautiful example. These are plumbing work.
Yeah, thank you.
So are Indian bond markets competing globally for capital? Or are they still largely domestic markets with some foreign participation?
Very interesting question, and I have a very different view on that. We, of course, glamorize FPI, but we also forget that India has a very, very large domestic capital base. There are banks, there are mutual funds, there are hedge funds. So honestly, we're not dependent on FPI. FPI is complementing to the domestic capital. And that's the beauty of it, right? So the FPIs are investing in a market which already had a very sound platform. Of course, there are frictions. There are a lot of areas to be developed, but the country is not solely dependent on foreign capital. It has got a great pool of domestic funders, for that matter. I think that's the beauty of it.
Yeah, it's so rightly said, no, that FPI is complementing the domestic market.
Yes.
Yeah. So when we talk about geopolitics and capital flows, how much do geopolitical developments influence investment decisions today?
A lot. A lot. So when an investor looks at investing in a particular economy, coming back to your first question, right? Whether it is hot money, but you also need to see a lot of variables. India may offer a great return, great perspective, but what is the macroeconomic situation? What is our political stance? Is the country seeing a political stability? Have we maintained a neutral stand globally, which we have, fortunately? How is energy crisis shaping up? So there are multiple other variables, and some variables might play out very well. Even in geopolitical scenarios like this, there are certain factors which are proven very beneficial for our favor. Say, for example, the depreciation in currency is great for the bond providers, but of course, the equity investors get shaky and pull out money. But that's been one of the reason you would see a lot of influx when it comes to bond fragmentation globally, right? Because everybody wants a multiple supply chain source. So China plus one played in our favor. The energy crisis, of course, we faced a bit of a challenge. We're facing a bit of a challenge there. If I have to wait at this moment, the macro or geopolitical scenario to some extent is positively weighed towards India, but not sure how sustainable this would be. So a solid geopolitical scenario, solid macroeconomical scenario is very, very beneficial towards attracting capital for the country. It's of paramount importance.
Yeah, I totally agree. So how much do geopolitical development, influence investment decisions?
As I said, that multiple variables. It would. And in fact, I would say last 10 years, I think we are seeing more interlinked decisions. There's a saying, right? If New York catches cold, New Delhi sneezes, right? So you cannot be immune to what is happening globally. I think the idea is to see that how much of the geopolitical tensions might play out in our favor. And as I pointed out, right, let's say at this moment, of course, many of the investors are pulling out money from US because the expenses have gone up. The people feel the yield might come down. The money has to be invested somewhere. And when it has to be invested somewhere, they will look out for an economy which is resilient, providing high yield and stable. And India could be definitely one of such economy where investors would want to put in money. So geopolitical scenario, this is a very, very key drivers for any of the investors looking at putting in money in any of the foreign economy. So Leelavati, to be very honest, right, we should be weighed against other emerging countries at this moment. You should look at maybe the Southeast Asian countries or Brazil or Mexico. I think a size is playing a paramount importance, right? The consumption, the manufacturing story, the growth story is playing out really well. Of course, there are curves which are at times downward, but overall, I think FPIs are buying out the India growth story, even at a geopolitical scenario like this.
Yeah, we should all wait and watch how
Absolutely.
the growth story will
Absolutely.
evolve ahead.
Absolutely.
Yeah. So, are the global investors becoming more sensitive to political and geopolitical risks than they were a decade ago?
I would say yes. And one reason could be that last few years, there are multiple large geopolitical events that has occurred one after another. After COVID, you have seen tensions among countries, the energy crisis. I think everything has a cascading effect on the money that fund manager is managing, right? So it's very important for them to weigh the macroeconomic factor. It's just that I think the scale of it at this moment is humongous. So it does play out a role very, very significantly.
So, in an increasingly fragmented world, does India benefit from global uncertainty or become more vulnerable to it?
I think that's a very important question. That is something very interesting, and this is something that we hear from many of the investors who are actually looking at China plus one mechanism, right? So, of course, people are looking at alternate supply chain. You should also see that at this moment, the yield that China is providing is far, far lower than what India is providing at this moment, right? So that fragmentation is playing out really well for us. So in some cases, yes, it is playing out. The currency depreciation is able to attract capital in the bond market. Inclusion in the global bond indices is playing out well. Sectors like renewable is playing out well because there is an energy crisis somewhere in the because of a tension in Middle East. But I think I would not like to say that whether it is playing it in our favor or playing against us. I think it is very subjective. Some factors would play in our favor. There's some factors which may not be in our favor. So at this moment, I would say the fragmentation is tilted towards favorable stance in India, but I think we'll have to see how it plays out in the long run.
Yeah, there will be, some things which will play out well, some things which may not play out well in our favor.
Absolutely.
Yeah, that's how it is. So, what is the biggest misconception, global investors here have about India?
Okay, so when we speak to some of these investors, people, I think they do not appreciate that this is not a single economy. There are multiple economies running parallelly. There's manufacturing, services, infrastructure, energy, IT, the multiple large economies that are being played or being acted on in this country. I think investors probably miss out that particular piece, that it's a country which has got multiple parallel economies running within it.
That's so true. We have multiple parallel economies running, yeah. So, what is that one structural strength that makes India attractive?
Probably one word that I would use, that in current market scenario, predictability is the word that's playing in our favor. People would want a risk adjusted return, but they would want a predictable return. And as I said earlier, that ability to absorb shock, that has actually has got humongous importance, that how well India can stand in a situation like we are in today, right? In middle of severe energy crisis that we are seeing. COVID had a very cascading impact on several economies, and India came across to be someone very, very resilient, right? So resilience, predictability, we should not undermine these two parameters, I would say.
Yeah, I agree that how well we can face such situations like the energy crisis, the COVID thing, how well we can handle such situations plays a very important role.
Yeah. And one point actually, Leelavati, is that the way we have maintained our political stance, the neutrality has played in our favor. So I think that is being viewed well by many of the investors as our political stance.
So, if in case India wants higher foreign participation in its market, then what needs to be improved?
See, the fundamental work has been done. We are part of the global bond indices. Market is looking liquid. We are making regulatory changes. We are giving tax benefit. I think you just have to bring a bit of finesse into the process. As I said, that investor would want a very efficient market. So when an API has to weigh between multiple market, the risk return is definitely one variable, but another variable is that how accessible the market is, how deep the bond market is in India, how liquid the market is. So these are some of the parameters, but I think this will evolve during the course of next 10 years. As I said, plumbing work, I mean, that has to keep going.
So, in all our conversation we had, you seem to be very optimistic, very
Yes.
positive. So, if you look ahead, how positive you are in terms of foreign participation on equities versus debt?
Maybe for next 10 years, I would say that we should see more participation in the debt market or the bond market. It's only because that bond markets are still under explored and underdrawn. So, you have more potential in that space. Equity market, I think we have a sizably decent, robust market. That market has seen capital flows for ages. Bond market is somewhere there's enough and more potential for the country to attract more investors.
So, Rima, thank you so much for your time.
Thank
And
you
with
so
this,
much.
we are coming to the end of our podcast. To end the podcast, I have a last question for you. So, if you had to pitch India to a global investor, what would be your single strength argument?
I would say that if you're looking at India for next 2 decades or 3 decades perspective, the growth story is already factored in. The structural changes is already factored in. I think India is going to evolve in its execution process, and that is where FPI should definitely look at India from its ability to execute the changes it has brought in earlier. So I would suggest that this is a great time to be in this country at this moment, and it's at a great inflection point, playing out fantastically well vis-a-vis other emerging sector. And this country is going to evolve to be a very resilient bond market over the period of next 10 years, I would say.
Understanding foreign capital is ultimately about understanding how the world sees India. Thank you so much, Rima, for joining us and sharing your insights. Thank you so much, viewers, for watching. Stay tuned for the next DebtCircle podcast. Thank you.